Welcome to AllGen's Money Minute. The other day we had a client ask us should he contribute money into his Roth 401k or his traditional 401k. And that question comes up a lot. Historically, the traditional 401k came out as an opportunity for employees of a company to contribute to their retirement, savings for their retirement. Then about a decade ago, the Roth 401k came out. What is the big difference? It's the taxation, how it's treated. When you contribute money to your traditional 401k, you get a tax deduction now. So if I make $50,000 and I contribute $5,000 to my traditional, I only pay taxes this year on the $45,000. Okay. On the other hand, if you contribute that money to a Roth 401k, you don't get a tax deduction today. Okay, now what happens? Later there's also a difference. Traditionally, you save money on the 401k today, but then you pay taxes on it when you pull it out. On the Roth 401k, you pay taxes on it today, you don't pay taxes when you pull it out. So that's the big difference between the two. How do you determine which one makes sense for you?
That's right. So the way you determine which one makes sense, and there's a lot of different factors here, is you think, what is my tax bracket going to be when I retire versus what is my tax bracket now? Right. And does anyone really know what the tax bracket is going to be when you retire? But if you're confident that your tax bracket is greater now than when you retire, then the traditional 401k makes sense now because you're going to get a bigger tax deduction now than what you would pay at retirement.
Right.
But if your tax bracket is going to be higher in retirement than it is now, then it makes more sense to do the Roth 401k.
Right. And that's a challenge. No one knows necessarily which one's going to be higher. So a path that we suggest often is we'll do both.
Yep.
Okay. This way you kind of have a contingency plan for regardless of what the taxes are, because you don't dictate the taxes, it's the government. Okay. So you're allowed to actually contribute both to your Roth 401k and your traditional. So if I've got $10,000 to invest, for my future, I can split it up into both buckets, knowing that regardless of the tax brackets later, you can pull money out from both and move accordingly to maximize your bang for your buck.
That's right. And then one other thing to remember too is that if your employer offers a match, that match is going to go into your traditional 401k.
That's right. That's right. So again, different ways it's going to cap, but hopefully that helps. Happy investing.